Welcome to another video from Creativo Solutions. You're currently watching the Accounting for Non-Accountants video series. I hope these videos are helping you better understand the basics around accounting to help you with either work or studies. Please post your comments and questions below. Tell me what you're struggling with and I'll make the video to help you. Please subscribe to this channel and visit the website for more content and resources to help. In today's video, we're going to be looking at profit in more detail. We spoke about financial performance before and now we need to build on what we've covered. Today, we're going to be looking at profit in more detail. We spoke about financial performance in the previous video, so please check that video out if you haven't done so already. The first question that I want you to consider is, why do companies operate? Well, if we're thinking about why do they operate, the first thing that should come to mind is value. We're going to be creating a business around generating value for our customer. So companies or sole proprietors or partners are going to be focusing on generating value. Value would ultimately translate into profit. So long as we're creating value for enough people, it's going to help the business grow and become more and more sustainable. So who is entitled to the profits? Well, the profit is what you derive from operating. So owners are entitled to the profits of the business. And we need to describe the actual calculation in terms of what forms part of profit. How do I calculate profit? Profit is calculated from income and expenses. The difference between the two will either give you a profit or a loss. So if our income exceeds our expenses, we have more income, meaning there'll be a profit left over. If our expenses exceed our income, that'll indicate that there would be more expenses than income and will ultimately land up with a loss. So when looking at income and expenses, depending on how much we have, it's going to either add value for the owners or not. So when looking at the relationship between income and owner's equity, if I have more income, the profit will increase. And if the profit increases, the owners will be entitled to more. And if they're entitled to more, their owner's equity will increase. Now we need to consider the expenses. If expenses are going to increase, expenses are going to cause a smaller profit. If expenses are going to rise, expenses will give rise to a reduction in profit or even perhaps a loss. So when expenses increase, that decreases the profit, which ultimately reduces how much the owners are entitled to. So owner's equity will decrease with more expenses because the profit will decrease. So looking at those relationships, remember to consider the direct and indirect relationship in terms of when owner's equity increases, it will be in line with an increase in income. Okay, so we need to have more income to get more profit to have more owner's equity. And the opposite, if we have more expenses, that will decrease profit, which will obviously lead to a decrease in owner's equity. Okay, so expenses decrease owner's equity and income increases owner's equity. Two other calculations to be aware of. You get gross profit and you get net profit. Gross profit is looking at the difference between your sales, which is a form of income, minus your cost of sales, which is a form of expense. So gross profit is sales minus cost of sales. We also get a net profit or a profit for the year, depending on where you are studying or covering your accounting. All income minus all expenses would give you that final line item being the net profit. So last time we spoke about an accrual basis versus a cash basis. If you still don't know what the difference is, please post a comment below or have a look at the previous video. We spoke about a bookshop that was selling goods on credit. So if the bookshop sells books to a customer on day 1 and the customer comes back on day 5 to pay for the books that they had purchased, there's going to be a profit calculation that we could actually calculate to determine if this particular business has performed, okay, based on that specific sale. So when looking at profit, we're taking all the income, so not only one customer, but all the customers that come into the store and who buy books. Those purchases, be it cash purchases or be it credit purchases, will be representing an income, because based on the accrual basis, we need to identify what has been earned and what has been incurred. So if I earn any income from any book sales, I'm going to record that as income, and I'll subtract all my expenses for running the bookstore. And the difference between income and expenses will give you the profit or loss for that particular business. We've come to the end of this video. Thank you for watching. Please comment and send questions below. I want to hear from you what I can help you with to help you better understand the accounting principles. Hit the thumbs up button if you liked the video, and subscribe to be the first to find out when new videos are uploaded.